Hello guys, you're welcome once more to just the chat. So I deposited $5 and it's currently at $100. This is it. Currently at $106, $107. This is the chart. This is the trade currently running. Okay. So this is not luck. I'm going to explain how I did this. I'm going to explain all trades. As you can see the deposit here. See the deposit was this was deposit a deposit of $5, and this is currently the trade is currently on $105. The account is currently on $105. So I want to explain how I did this. It is not luck. It is not luck at all. There's no such word as luck when the result is consistent. This is what I do all the time. And it's very, very simple. You yourself, you can do it as well, applying the same rules and the same principles. I'm going to explain to you here. So first of all, we are going to look at the trade I took first, my first trades, because these are the trades here. This is the complete history. This is the history. These are the whole history. The first trade I took here was volatility 10 index buy. So before you can do this, there's something you must put at the back of your mind. There's something. For example, you are depositing a peanut account such as $5, $10, or $20, and you want to raise it to about 100 to 300 to 1. You can do it. You can raise it to $1,000. It is very, very possible. Okay. So the first thing you must have at the back of your mind is that these tiny accounts, any movement can blow it out. What do I mean? A wrong trade can take the account off. A wrong trade can totally off the account. So what must you do? You must take a market, or you must wait for a market that is trending. What do I mean? For example, you will agree with me that this market is a very clear buy market. You agree with me that this is a clear market. So first, you must have a clear buy market. That is the first thing. And secondly, before you even have a clear buy market, you must have at the back of your mind that one wrong trade can blow this account. So what you want to do, the first trades you want to take, that your first trade you want to grow the account with, the first trade you take, you must be very patient. You must wait for it at a very good zone. For example, now, let me bring in this drawing too. My first trade I took at this first trade here with $5. I took three, I be for about four position. I took about three or four position. I think at the bottom here I took about two trade or three. Then when it got somewhere like here, I added extra one or two. Here was the take profit. The take profit was here. So let us see how that actually reacted. So this was it. This is the history here. So I used in the first trade, I took four position. I took two at first, and I added extra two. You can see the first one that gave me $6 and $5. Then the extra one at the top gave me $2. They all had take profit. And while doing this, your targets must be accurate. You don't have to be holding trade for 1 year or 2 years, swing trading when you want to grow an account. No, you don't do that. Okay. So the first trade I took it at this point. If you look at this buy pattern, it is very clear. You see, price refuse to go above each other. It is a very simple thing. You see them all the time in the charts. Even this one here currently, you can see it not go below here. You see that? So that was why I haven't entered more position here. You can see that, okay? So I took that trade at this particular zone here, this particular spot, and my take profit was there, and it hit it. That took the account to that gave me about $16 plus. I took the account to about 22, about $23 from that $5. So my account is already buoyant now. So let us go to the history, and you see the next trade. I made a mistake, but I won't call it a mistake. The trade was a loss trade. I entered two position on step index, and those almost rip off the full account. It took the account back to what? It took the account back to about $9. It took the account back to $9. And something you must know: you must be ready to cut stop. You must be ready to cut loss. You see a trade is going against you, you want to keep. If I had held this trade for a longer time, it would have blown the whole account because the account was very tiny. It's not like my usual account of $1,000 of a $3,000 that I usually trade. No, this one is very tiny. And when you are trading a tiny account, you must be very conscious and smart. I had to cut off this trade. If I had held them for a longer period of time, it would have off and blow the whole account. So I had to cut them off. You see that? So this was the step index. Let us go to step index chart and see something. Let me show you where I took that trade. I actually sold step index. I sold that was a sell. Let's see. So yes, that was a sell. So I sold step index at this point here. I think about this point here. So the thing was giving me several signs to go out. I never went out until the trade get to about this point. That was where I cut off. So cutting off the trade, that gave me about $9 and $7. That's off almost blew my account. I never saw this. Look at what is happening on stepping. Are you seeing this? I never took note of this. And you cannot be 100% accurate. You cannot be 100% correct. You cannot be correct all the time. That is why you must cut your loss. You cannot be 100% accurate all the time. You cannot be 100% correct. Sometimes you make mistakes, you make errors. So cutting your trades, cutting your losses is very important. Okay. So after that gave me that thing gave me loss. I know that this guy is going to move upward from this point, judging from what it has been doing from the previous candles and all that, from the previous market movement and patterns. So I entered to buy from here. I think that gave me about $8. That recovered the loss I had. So this was it. This was it. Yeah, step in there. I used to this is 8 and 7. So 8 7. That cover exactly almost the same thing. That covered the loss I had. Okay. So moving on onward, I had to take step 10 index. This was this morning. Let us go to today. Today. So this was this. Where is this? Where is today? Okay. This is today. Are you seeing this money trade? Look at this money trade. Are you seeing this 333? I took another buy on 10 index. At what spot? Let me show you where I took that buy from. Okay. Let me show you that where I took the buy from. Let's go out of this trade now. Should we? Let us hold it. It's going to move up. So let me show you where I took that buy from this morning. This is a very early morning. I took that buy at this spot here, at this particular spot. Was it here? No, no. I took that buy at this spot here. Are you seeing it? I put my take profit at here and it hit it. Though that trade gave me $21 this morning and it creased my account back. Okay. So the next one I took was this step in there, this little trades here, and then continuously was buy. So what I want to learn here is that if you want to trade a tiny account, these are the things you must know. First, you must be willing to lose the account. What do I mean by you must be willing to lose the account? The account is very tiny. How can you trade with $5? Is that even it's possible though? You can make some massive returns. It's very, very possible. But if a trade goes against you, now, if a trade goes against you, just one movement can off the $5. So you must be very, very conscious. You must be very conscious on trading a very tiny account. And you must have it at the back of your mind that this money you can lose it. You get it. Because the account size will not be able to withstand market movement. You get. So secondly, you must patiently wait for what? For a trending market, a very sharp market that is either buying or selling, a sharp buy or a sharp sell market, so that when you enter a buy or a sell trade, it will just move immediately and go for your direction without doing any kind of dancing, without doing any kind of consolidation, okay, or ranging before it goes to your predicted area, okay. So and the third thing you must know, you must be willing to cut losses. You must be willing to cut losses. He who cut loss today live to trade another day. For example, I didn't cut this loss. Now where is it? I didn't cut those step index loss. Where is it again? Custom period. Yesterday to today. For example, I didn't cut this step index loss. This would have blew my account off. There won't be any account for me to actually continue trading. So you must cut off loss. You should not be this emotionally attached to your trade. You must have a trading plan. You must have a trading plan that, see, if a trade goes against me, I must cut it. No matter what, I have to cut that trade. Okay. And thirdly, you must have a trading strategy. Very, very important. The strategy I actually used here, there's a strategy, the pattern I actually used here that actually gave me some insight on how to trade this market. So I believe this video has been able to help you. If you are new to this channel, don't forget to click on the subscribe button and turn on the notification bell so that you will gain more as I upload more videos. Okay, and then if you want to register with the broker, there's a broker on the link of this video. If you want to trade certain tick index, I dropped the link on this on the description of this video. And if you want to register on Deriv, there's actually a video on this same channel on how you can actually do that. So for now, remember, don't forget to like, share, and click on the notification bell so that you get alert whenever I post a video. If you want to chat me up, you have any issue, you want to have any questions, my WhatsApp number will be on the description of the video as well. So for now, remain blessed. Bye for now.